Hey YouTube, so I'm making another video. So this is my my investment account, and so I changed my strategy. So I'll explain what I'm doing now. So my total gain loss right now is plus 4,100. So basically what I did was I bought a straddle for Dollarama. So I bought a straddle for Dollarama before the earnings report. So what happened was I bought 10 calls and 10 puts, and then the price went down after the earnings report. So I sold the put for I sold the puts for 6,200 and I bought them for 1,600, so I made 4,500 profit. So that is why my total gain loss is up here now. But so anyways, I'll explain the strategy. But let's look at I need to look at the allocation to look at what so here's my holdings. So in terms of my stocks, so BTE still down 16%, WEED is down 28%, IVN is up 14%, FM is down 26%. So I sold out all my CO because I'm trying to exit out of covered calls. So right now I can't exit out of any of the other covered calls because I'll lose money. So because I want to put my money into either long calls or straddles, and I'll go more into detail. So anyways, the BTE, all the BTE calls are down because I bought at $2, and then well, what I did was I rolled it down from $3 to $2, so then I think I made 1,800 profit on that, and then now the price is going up again. So then so I just have to wait for that. I just have to hold this until BTE rises enough so that, because right now BTE is down and the call is down, so because I rolled it down. So anyways, that's a little bit complicated. I just have to wait until I can exit out of it for break even or profit. And then I bought 20 straddles for BT, so 20 calls and 20 puts in 6 months. But I'm trying to sell these as quickly as I can because I'll explain like during which time period a straddle is profitable or not profitable, because I figured out how to do the calculation. And then so BB, so I have a straddle on BB, 10 straddles on BB, and I'm gonna probably buy 10 more straddles on BB, at least 10 or 20 more. And the reason for that is because BB has its earnings report on December 20th. So say BB next. So it's scheduled on December 20th. So basically I'm gonna hold it until December 21st, and I'm gonna sell it because there's gonna be some enormous price change. Should be. If there isn't, I'll still sell it, or I'll sell it when it's at break even or higher. So WEED, so I have to wait until break even before I can exit out. And then CLS, so I have straddles on CLS. Before it was just a call, but I bought the puts. It was just four long calls on CLS, but then I bought the puts so to turn into 4 straddles. But I think I'm still gonna lose money on this, but yeah, there's nothing I can really do about that. So Dollarama, so what I did was I bought 10 straddles at 100, and then I think the put went up like 400%, so, and then the call went down 92%, so this is stuck. So so this part is just obviously every time you buy a straddle, if you make money, that means that one half of the straddle, either the calls or the puts, is down like 90 or 95%, and then the other part is up, 300-400%. And then I bought 2 more straddles farther out. So these are 6-month straddles, but I want to exit out of them because I did some detailed calculations, and it's not actually going to be profitable. And so I still have covered calls on FM, so I rolled it down from 8 to 7, and I think I made some profit. But I have to wait. Either if FM drops down more, which I don't think it's gonna do, I think it's gonna go up now. So then I have to wait until break even to exit out. And then same with IVN, so it's going up now, so I have to wait until break even to exit out. And then NXE is sort of I bought NXE covered calls, so I entered some NXE covered calls, so I have to wait until break even to exit out. And I still have the long calls on NXE, so because I have short calls and long calls on NXE, I don't need to do a straddle. So that's why I didn't turn the long calls into a straddle, because I have long and short. And then I have a straddle, so 3 long, 3 short positions in Shopify. So this is like a straddle here, and then another Shopify straddle. So this one I'm gonna exit out when it breaks even, because I did some calculations and I don't think that it will be profitable over the 6-month time range, like at most maybe 5-day or 1 month. So I'm gonna wait for the nearest break even and then exit out. So that's so that's basically, that's what I'm holding, and that's my strategies now. So now I'll explain how to do the calculations for so CLS is the best if you want to do a 6-month either a long call or a straddle will be profitable, but obviously long call would be better. But if CLS did go down, but you could buy a put temporarily and then make money and then sell the put and then hold the long position on the call. So how you would do this, how you would do the calculation is like this. So CLS right now, if I buy the 6-month call is $5.64. So so that's the cost, and then that's the cost, and then let's see, so it's been up 106% in the past 6 months. So assuming this holds, then it's 1 plus 1.06 times the price right now, so 39.49. So it's expected to be at 81 and 34. $81.34 in 6 months. And then days till expiration, so after 6 months there's only 9 days left. So the expected price of the call option after 6 months should be $42.39. So, or $4,239 for the in total. So if I look at the ratio, 4239 divided by 5647, so I expect the call option to rise 751% over 6 months. So obviously this is good. So this is essentially how you calculate if a long call position will be profitable over a given time range. Is you look at the historical data to sort of project how much it will be in the next 6 months, and then you get the price, what you expect the target price is after 6 months, and then you adjust the days until expiration, and then this will give the expected price after 6 months. So this is if you're holding long positions, so 6 months or longer, and then you're expecting the stock to rise up. But obviously, if you were to do this, you have to be careful when the earnings report comes out. So for example, so CLS, the next earnings report should be on January 23rd. So that means before January 23rd, you have to turn it into a straddle, because there's going to be some very high short-term volatility. So then you have to turn the long call into a straddle, because it could go up a lot or it could go down a lot after the earnings report, and then sell the straddle after the earnings report. That's essentially the usually either the earnings report or any other sort of big news. So if there is big news, then you just should see it here. If you look at Google Finance, or or wherever you get your news from. So that's how that works. And then sort of this is where you look at the earnings calendar. I'll put all the links in the description. So if I look at the earnings from today until the end of the month, so BlackBerry is on the 20th, and then most of these other companies aren't really, they're all very small companies, so that so I wouldn't they're not on the TSX, so I wouldn't buy straddles on those. But BlackBerry is obviously a big company, so So I'm buying straddles on BlackBerry. So I'm gonna buy more, so before December 20th, and then sell them right after December 20th. So that's how you make money from the earnings report. You can also make money from other news using a long straddle. So for every put that you buy, so every call you buy a put, that's what a straddle is. And then let's see what else. So yeah, I'll sort of calculate how much I would make from a straddle for BlackBerry, assuming let's say that the price changes by 20%. So let's say the price goes up 20%. So 5.84 times 1.2. So then I expect the price after the earnings report to be $7. So how I would do this is for the straddle. So for the straddle, you have to calculate the call and the put. So the call is $48. And then the put is $35. So the total cost is $83. And then I'm saying that let's say that I hold the straddle for 5 days, and the price rises by the price changes by 20%. So first I do the scenario where it goes up by 20%. So if it goes up by 20%, then it goes up to $7, and then the put is worth $6. So the put is worth $6, and then the call is worth $133. So then in total it's worth $139. So that's if it goes up 20%. Now let's see what happens if it goes down 20%. So if it goes down 20%, then it's 5.87 times 0.8. So it's $4.69. So then $4.69 after 30 days, after 5 days. So then now the put is worth $109, and the call is worth $5. So then in total it's worth $114. So as you can see, no matter if BlackBerry goes up 20% or down 20%, I make a big profit. So I make if it goes up 20%, then I make 67% profit. And if it goes down 20%, then I make 37% profit. So that's the idea. So I make either a 67% profit or 37% profit over 5 days using long straddle, as long as the price of BlackBerry changes by 20%. So either goes up 20% or more, or goes down 20% or more. So assuming that this happens after the earnings report, then I make a lot of money in a very short period of time. So that is essentially the idea. So as long as there's an upcoming earnings report, and the most significant one right now is BlackBerry. So I just did this for Dollarama, because Dollarama's earning report was I think it was this Wednesday. It was like a few days ago. So see, Dollarama's earning report. Dollarama's earnings report was on Wednesday the 13th. So it was 4 days ago. And then I made, well, I can't say I made 4,500 profit, because I also lost from the call part of the straddle. So in total, I think I made about 2,000 something. So, but the idea is that if you know that it's a big company and there's going to be a big price change, then you can buy a long straddle and hold it for a few days. So buy it maybe a few days before the earnings report and sell it a few days after the earnings report. And there's very little risk, and you should make a lot of money. So the way that you can know whether there's going to be a big price change is you can look at the last earning date and then see if there was a big price change around the earnings, around the time of the earnings, or you can look at the change. But usually, if it's a big company, so you know, a well-known company, then you should always buy a straddle before the earning, and then sell it after the earnings report, because clearly it is very, very profitable. And in the long run, though, like if so obviously there isn't an earnings report every day, and it's not something that you can hold most of your money with. So then what I plan to do is I plan to exit out of most of my covered calls, or maybe all of my covered calls, and then buy long calls for companies that I think will, you know, like CLS will have a major price change over a longer period of time. So earnings report, you expect, you know, overnight change, but then this is still a longer period of time. So CLS is the best. If you're going to go for a long call or even a straddle for over a 6-month period, I can't find any better well-known stocks, you know, with large cap stocks, you know, over $1 billion valuation. So that is about it. So if you're not clear about this, I'll explain in more detail, and then maybe next week I'll have more examples. But basically, what you want for a long straddle is that well, if you just want to do a long call, then assuming that the price in 6 months for the option is higher than it is when you buy it, then you make money. But if you also want to, just in case you want to convert it into a straddle, that you want to have at least double, so it has to at least double, expected to double in price over the time period. And then for me, I'm very safe, so I want to do at least triple. So that means that if I were to do a straddle, not only would I break even, I would make, a 50% profit at least. And then, so for CLS, it's like a 700% profit, assuming that the next 6 months will be the same, which may or may not happen, but mathematically, I think this is anyway, so I don't want to keep the video too long. I think everybody roughly has an idea of what I'm trying to say, and yeah, so next week maybe I'll make another video and follow up, and maybe talk about what happened with the BlackBerry straddle, see if how much money I make from that. So anyways, this is the end of the video.